Everybody, today is Friday, June 14th, and today my performance was not optimal. I did not trade with an established pre-market plan. I lost money. I took trades I wasn't as confident in because this goes back to my philosophy of you're not going to be able to take a trade every day. You can only take, a trade only like about half the days will be optimal for trading. And today was a day that had some good opportunities. It was like a range day for most of the day, but I didn't have confidence in them. In trades that would have won, I got myself out of early. So I really need to focus on setting and forgetting, doing those Walmart style trades where I make the trade and I walk away and I let it run. And it's hard for me to do that. And my last trade where I had my bigger loss of the day, I should have cut out of early because I did recognize that I'm shorting into a cup and handle and it looks bullish. So that was a mistake, but these dumb trades, they're easy to cut out, and I know I'm going to start cutting them out with more experience and more time. And ultimately, it just keeps coming down to staying patient, not trading bad environments, being patient. I'll say that 100 times probably over the next few videos because it's so important to only trade when you can have an edge. And I've been waiting for the 15-minute bar and the hourly bar to close, and that's really helpful because I get more information. That's very useful. I'm not opposed to buying a candle or selling a candle that is still forming, so long as it is an area where there are a bunch of wicks. Does look like a very established area of interest where possible buyers or sellers could come back in to support me. Ultimately, though, all this needs to be in the context of we're trading with the big man. Who is the person that is dominating the market today? Today it was hard to tell. Ended up being the bulls, and I should have just worked with them better, participated with them better. But I think there's a lot to learn in this video. I think it's a really good day to analyze and learn from, so I'm very happy about that. So with that, let's just dive into the video. So these are my S&P trades of the day. You can see I got short at the top of the range, and I accidentally sold out of this. I got out of this early, so I re-entered, but I didn't have the confidence to hold. But nice little win there. This was my NQ trades, so I got short at the top of the range because I saw there was a lot of bearish action earlier, and I could just tell it was a range, so I thought we'd get another push down. But I had too much size on. I had like a couple MNQ contracts and the ES, so I tried to just get out of the NQ, but I ended up getting out of ES2 on accident, so bad trade. Then I tried to go long, and I flip-flopped and went short because I thought we were back at the top. That was just a dumb trade. Dumb two set of trades. After that, I went long, and I wish I just held that long all the way up to the top because that would have worked out really well, but I got out too early, and then I went short, and I lost, and that was my biggest position of the day. So that is unfortunate, but like I said, we got a lot to learn from this analysis. I think it's going to be a really good analysis video. So yeah, this is when I started recording. I think I've been cutting my recordings whenever I'm not trading, just to cut out the noise and stuff. So yeah, this is our first short. We can see there's kind of like a lot of choppiness in this area, but it hasn't got above that level where I put my stop. So I thought it would be a good time to go short on NQ. And I got short with 2 contracts. And I also got short an ES contract because, it just looked good there too, to go short. And I also noticed that the ES was up higher than the NQ. And the ES, the S&P future, usually trails the NASDAQ future. So, yeah, you can see here it started to go my way. wish I just didn't interfere at all, but I accidentally got out of this position. I meant to just get out of the NASDAQ, but I got out of the S&P position too, which is unfortunate. And yeah, that's where I capture it in my notes. But people always say you can just get right back in, so that's what I try to do with ES, and I do that. But I don't know where to place my stop loss. I'm not confident in it. Even though it's falling, I get out right away. I just didn't have the confidence, and I wish I just re-entered right there. Because it looks like it's going to go at least down to the 18 level. I wish I just got back in and held it and had the confidence to hold it, but I've been struggling with that lately. Having the confidence to hold my positions till just all the way through to where I should, and that's unfortunate because I'm missing out on profits, and I need to have my profits large enough that they pay for my losers. So similar lesson to yesterday, though I think yesterday we had more reason to stay in and it was more stupid to sell out. Because today's a range day and it's okay to take those like shorter moves, like base hits. Today is not a day you want to go for home runs. It's very much a base hit day. On range days, it's nice to just fade the edges of the range because 80% of breakouts fail on a range day approximately. And as you can see, if you look at my daily bar in the top left, I had a lot of technical issues with my charting today. I had to change off the continuous contracts for like my larger time frames. Normally I just keep those at the continuous, but yeah, I had a lot of issues with my charting today, which is really unfortunate. That's never really happened before, but oh well, shit happens. And when it does, you probably just shouldn't trade. Alright, I had to cut the video, but I am back now. So now, it looks more like we're at the top of the range. This would be a better time to go short. After seeing that spike up and then some exhaustion, like that big wick up top, that'd be a good time to enter short and place a stop loss above the top wick. And the reason I took that last short when I did was because if you look at the hourly chart, those big wicks to the downside, it just suggested that it's probably going to be another attempt to the downside. But the fact that the hourly candle has broken above those indicates there is some strong bullish sentiment. And we could have, just looking at the first 5-minute candle, first 2-minute candle, those can be really strong indicators of who's going to try and control this day. It was confusing because looking at the hourly chart, big sell-off overnight. Wondering if there's some European news that caused that. But it makes sense to be more bullish today and be confident going long at the bottom of the range. So, especially with the good CPI and inflation numbers we got this week. It's better. You should be more confident going long at the bottom of the range than you should going short at the top. Doesn't mean you can't take shorts at the top. I successfully did today, but you can have more confidence and conviction going long at the bottom. But again, it was hard for me to feel very comfortable doing that, just with how that overnight action. And I know, like, overnight action, they can move it in a big way off minimal volume, but they moved it a lot overnight, all the way down to yesterday's low. So yeah, I don't know, I felt that bullish pressure, and I decided to get long. And this is the position I wish I just didn't touch. If I just didn't touch this position, I'd had a very nice payday. But unfortunately, I didn't have the confidence to hold it just because it was a range, and this is like a pure flag pattern, and we don't really like to take flag patterns in ranges. So even though this trade would have worked out, do I think it's that wise of a trade to take? Probably not. And with how rangy today was, just looking at the 15-minute, probably just shouldn't have really traded today, really, to be honest. Reason I bought that was it came down to the yesterday close level, and there was also the 15-minute moving average. So the moving average is, powerful, but it really isn't like statistically backed up in like quant studies. It can help you, if it's above it, better to go long, right? And you can see it's slowly grinding up. So, it's a useful indicator. I mean, there's a reason I have it on my chart, but more important than that is the level, the daily level. That yesterday's close level is really important. So this is where I start going short, and this is dumb because, like, this is a cup and handle. We're slowly grinding up. It's accepting the reason this price action is different because it's actually like accepting the level and starting to, that last 5-minute candle closed on its high, to the upside. So I should have just got out right here. It's obvious that, this upper level of this range is actually being accepted right now. It's probably not going to have a harsh fall off. Those wicks on the 2-minute indicate that too. So I should have just taken myself out of the trade right here. I'm still trying to justify, if you look at the hourly, I'm still trying to justify going short, but it's just not smart. I mean, the last hourly candle just closed on its highs. This is a time you want to get long, and you can just don't trade because we're at the top of a range. But I think this is a good long to take. I wish I took it. It does go up to that 70 level, 19,670. So yeah, I should have taken this long. Definitely shouldn't have, or at least, if not take the long, at least definitely don't be short. And then you can see, very bullish candle there. I try adding to my short position with a tight stop loss. But yeah, it's accepted this level. It's slowly grinding up. This is how you usually get those big parabolic moves to the upside for like 30 or 40 points. Not like huge hourly bar, but a good sized move. So this is pretty much the end of my recording. Appreciate you watching. I know what I need to do to get better. Just stay patient and avoid suboptimal times. Hold on to my winners longer. It only takes 1 or 2 really good big trades every couple weeks to make your account. So it's really just key is just staying patient, waiting for those really A+ moves. It's like in poker, you have to ante up every time, but you only really want to go big when you get like pocket aces, pocket kings, you know, a really good flop. In trading, you don't have to ante up every time. You can just put money on when you get pocket aces. So it's about taking those really, really good trades when you have pocket aces, and going big when you do. And if you don't have that, just simply staying out. So that concludes my video. Have a good weekend, and I'll see you guys next week.